This is a less than 10-minute recap covering what happened in the markets in 2023, what we're looking forward to in 2024. I also have some really important financial planning reminders at the end, so make sure you watch all the way through for those. I'm Catherine. I'm a certified financial planner and the founder of Sunnybranch Wealth, a fee-only investment advisory firm for millennial and Gen Z inheritors who want to create positive impact with their wealth. The first part of the story is what people thought was going to happen in 2023. As we rounded the year into 2023, experts and pundits were pretty unanimous that they thought that it was going to be a bad year. Almost everyone was saying that the US was going to hit a recession and that markets were going to perform poorly. The reason they thought this was that because at the start of the year, the Federal Reserve was raising interest rates, and they didn't think that there was any way with that happening, our economy would be able to withstand it and avoid a recession. What actually happened was that the markets had a fantastic year. The S&P 500 ended the year up 26%, and in the last few months of the year, it was up 14%. This is why you stay invested in the market. Especially if you're young, the best strategy isn't some fancy trading options bonanza, it's to buy and hold. If you had listened to those pundits who thought it was going to be a bad year and sold out of the market, moved into cash, and wanted to weather out the storm, you would have missed fantastic performance in 2023. Why was everyone so wrong? Broad strokes, the answer is that the US economy proved to be much more resilient than people thought it would be. Even though the Federal Reserve was raising rates at the beginning of the year, the economy withstood it. There was strong GDP growth, there was strong economic data, and those economic indicators and how the economy was functioning as a whole stayed strong throughout the year. Then what you saw in the latter part of the year was that the Federal Reserve saw inflation start to cool, and as a result, it stopped raising interest rates and signaled that it would be lowering interest rates as we moved into 2024. That caused the markets to have a significant jump. That's why we saw that 14% performance in the last couple of months of 2023, is because when the Federal Reserve were raising rate, it depressed the prices of a lot of companies who rely on capital to grow, because as interest rates are increasing, the cost of capital becomes more expensive. It becomes more expensive to grow. Investors started to believe that the Federal Reserve would be lowering rates this year. They then snapped up a lot of those companies whose values had been depressed on the theory that when rates fell, there would be a significant jump in value in those companies, and they wanted to be able to capture it. So everyone was wrong about the markets in 2023. What are they saying about the markets in 2024? Overall, it's a much rosier picture. There's no clear consensus, but generally people are saying that the markets are going to perform well. They think the US economy is looking really strong going into the year, and that we should expect a year of pretty high performance as we look forward into 2024. The two major caveats to that are, one, it's an election year, not only in the US, but also for a huge amount of the world. So almost 50% of the global population is going to be voting in an election this year. And as a result, there's a lot of potential for geopolitical instability around those elections, not only in the US, but also globally. The second risk factor on the horizon is geopolitical tensions, where we've all been following the various conflicts and wars around the world, some of which may be intensifying and that may exert an inflationary pressure on global economics. Despite that, because of the overall health of the US economy and because of the fact that there was a lot of fiscal stimulus enacted by Congress over the past couple of years that should result in some significant job creation in 2024 and beyond, experts are thinking that the US economy is going to be able to withstand it and grow, maybe not at a huge clip, but grow pretty steadily and keep markets pretty steadily moving upward throughout the course of the year. I'm not 100% sure. The first reason that I'm not so sure is that all the experts were wrong in 2023. So I don't know why you would give their predictions a lot of weight as we move into 2024. My concern primarily is that when you have a consensus in the markets, like we seem to now, that the markets are strong, they're going to keep moving upwards, that things are going to go really, really well in 2024, any shock to that prevailing assumption can be outsized. So if you have people expecting that something bad is going to happen and then something bad does happen, the response might be more muted because people expected it. They had already priced it in. But when everyone thinks the markets are going to go up and then there's some sort of external or internal shock, then it can have a more outsized impact because it's a surprise and everyone has that knee-jerk emotional reaction. The other reason is that I don't put a lot of weight in predictions in the first place because I'm a long-term buy and hold investor. I'm young, I'm still saving for retirement. I want my money to keep growing. What happens in 2024 doesn't matter to me as long as I continue to put money in the stock market so that it can grow when I need it 10, 20, 30 years down the line. Moving away from markets, I have 3 really important financial planning reminders as we start the year. The first one is that there has been an increase in the amount that you can put into your employer-sponsored retirement plans and into your IRAs. So if you have a 401k or a 401(b), the annual maximum contribution, if you're under 50, has increased to $23,000, and the annual max contribution for an IRA or Roth IRA has increased to $7,000. So make sure you go in and check those elections to make sure that you're still maxing out those accounts if that's your plan. Second thing to keep in mind is that the deadline to pay your last quarterly estimated tax payment for 2023 is coming up on January 15th. So if you have any questions about your 2023 tax bill, you are running out of time to make sure that everything is squared away. You should reach out to your accountant ASAP if you have any questions to make sure if you need to make a payment, you can get it in on time and avoid any potential tax penalties when it comes to April. Last thing, also on the subject of taxes, keep a lookout for tax forms that are going to be coming to you either electronically or by mail over the next few months. You could have 1099s, W-2s, K-1s, other forms coming. Make sure that you track and keep an eye on these as they come in so that you have them all ready to go when it comes to tax filing time. If you have any questions about anything I've covered, prior market performance and how your investments are doing, what might be coming next in 2024, please don't hesitate to reach out. I'm always happy to chat. Put a link to schedule a meeting with me in the description box below. And